Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Here's some fixed income and treasury bond ETFs, which again are in the news. TLT has been rallying for a while. Again, treasury bonds are a flight to quality. When there's blood in the streets and the equity markets or stocks are selling off, there's a few places that investors hide and put money in. TLT is one of them. Gold, defensive sectors like consumer staples, and healthcare and utilities we talked about. But definitely, I mean, we're at 60-year lows in yield right now, gang. I think we hit 1.85% on the 10-year note today, 30-year bonds at 3%. So if you want to lock up your money for 30 years and lend the government your money right now, you'll get 3% per year. So if inflation is 1.5% and you got to pay taxes on that, it's really a negative investment right now. But there's no risk to your principal also. So you might be better off parking your money in your CERTA or your Sealy mattress than putting it in the bonds right now because the yields are so low. But it is safe, and so far we've never defaulted on our debt. But one thing also I want to keep an eye and let you know about the TLT, some of you might be aware of this, but a lot of bond traders are really good stock traders. A lot of bond traders actually know more about the stock market than equity traders. So even if you never trade bonds or invest in bonds, keep an eye on the TLT or the 10-year Treasury note because, if the bonds are going up and yields are coming down, sometimes they'll go up 3 or 4 days before the stocks drop or a week or so. But usually if bonds are going up, yields are going down, the stock market's getting pretty close to a sell-off as well. And that's true many, many times. So keep an eye on TLT. And again, we're at 60-year highs in bonds and 60-year lows in yield. And the market's telling us that the stocks are going to probably keep on going lower unless the bonds start selling off and the yields pop up. One thing on the QE2 and QE1 quantitative easing, one of the features of that is Bernanke and his buddies are buying cash government bonds and securities to drive interest rates lower. Well, the bond market's already doing that on its own without the help of the government. So the bonds have been going up since QE2 ended in July, and yields are going down. So if he buys more Treasury bonds and drives yields even lower, is that going to create jobs or stop the housing market or help GDP? Possibly, but again, keep an eye on TLT, and many times you can take the cue in the stock market from what bonds are doing a couple days ahead of time. Okay. IEF, the iShares 7 to 10-year Treasury. TBT is 2-to-1 bear Treasury. So when and if bonds start coming down, TBT will go up twice as fast as bonds come down. One of my other favorite sayings is markets like to take the stairs up and the elevator down. So at one point, bonds are going to hit some supply and yields are going to spike back up to 2.25, 2.5 at some point, and bonds are going to come down pretty hard and fast. If and when they do, if you're long TBT, TBT will be going up twice as fast as the treasuries come down. Okay. TMV is the Treasury 30-year ETF on steroids at 3-to-1. So if you're really aggressive, you can buy some TMV, and that'll go up 3 times as fast as bonds go down. So I mean, you really need to know how to manage risk and be prudent with these 2-to-1 and 3-to-1s because the leverage is a double-edged sword. The gains are exacerbated, but so are the losses. So you really got to manage risk. But when you know what you're doing and you're educated and you know how to read the charts and you know how to manage risk, some of these 2-to-1 and 3-to-1 products can beef up your returns. JNK is a great symbol for the Spider Barclays high yield bonds. These are junk bonds. This is an ETF that tracks junk bonds, and lately junk bonds have been doing pretty well. There's more risk, but there's more reward. So JNK is a good symbol for the Spiders Barclays high yield bond. TIP is the tip shares, the Treasury index protected securities, inflation protected securities. So they have the built-in inflation with them, so you can buy the tip. LQG is the iShares investment grade corporate bonds. So these are AAA bonds. Right now they have low volume, but they're not a great day trading vehicle, but you can definitely invest in them. and not worry about the low volume right now. I still have a pretty tight spread between the bid offer. But LQD is the corporate grade bonds, good AAA bonds. HYD is the high yield. HYG is the iShares high yield bond. Those are like the junk, JNK. Anything that says high yield, those are junk bonds. So that's similar to the JNK. It has low volume right now. AG is the great aggregate bond fund. This has municipals. This has corporates, and it has treasuries. This is a well-diversified bond fund with mutual, it's got treasuries, municipals, and corporate bonds all mixed in there. So very good diversified bond fund. Okay. Here's some currency ETFs. UUP, the dollar is the dollar ETF. UUP. It's a trade-weighted currency versus the euro. 57% euro, 15% yen. So 70% of the dollar is going to be weighted against the euro and the yen. And the British pound is 11.9%, Canadian dollar 9.1%, Swedish krona and Swiss franc. Okay. Yeah, there's a little relationship between the FAS and FAZ and FAS. Those are the 3-to-1 financials. We're going to cover those shortly, Manu. A little bit, yeah. There's the UD, the Plowshares US dollar bear, low volume. So if you're bearish in the dollar, you're better off selling UUP than buying the UDN, because UDN doesn't have volume right now and liquidity. RIDEX has a bunch of currency shares: FXE, Euro, FXF, Swiss franc, Japanese yen, Canadian dollar, WASI, FXE, British pound. Wisdom Tree has the Chinese yuan and the renminbi. The only two currency ETFs that are liquid, gang, that do 1 million shares per day or more and have a tight spread between the bid and offer are the UUP and the FXE. All these other ones have low volume, in parentheses, the Swiss franc, yen, Canadian dollar. Hopefully in 6 months or a year, there's more institutional participation and they get liquid. But right now, you're better off trading currency futures or the over-the-counter FX versus the low volume ETFs. All right, volatility ETFs and ETNs. CBOE, there's the fear index, the VIX, dollar sign VIX is the fear index from the CBOE, and there's no ETF in it, but there's the VXX. That's the iPath S&P 500 short-term, and again, it's an exchange-traded note. Okay, so you can speculate with this. This does 10 million shares a day, and at daily today, it probably did 25 or 30 million shares on a big down day. The VXX popped up. The cash VIX was probably up 9 or 10% today or more, and then the VXX is probably up 6 or 7 or 8%. It's not going to track it one-to-one because the cash CBOE VIX is just tracking near-term volatility the next 30 days. The VXX is looking out like 45 to 60 days. It's short-term. You can use it as a hedge, or you can use it as speculation. If you have a nice-sized mutual fund or ETF portfolio, and you're worried about a downdraft in stocks, you can buy VXX and you're hedged. If stocks go down, what you lose in your mutual funds or your long ETFs or your long stock positions, you're going to pick up being long VXX because volatility will pop up if stocks sell off. Okay. And then ProShares have just released a bunch of new ETF based on volatility, but the big one's VXX. That's the one with all the volume and the lion's share of the market share. These other ones are new and they don't do volume yet. VIXM is a midterm ETF, and there are about 3 or 4 more that are relatively new as well. Here's some leverage and inverse ETF and stock indexes I'll put up there. If you have a cash account or an IRA account, you can't sell short in those accounts, right? You have to have a margin account. But if you have a cash account or an IRA account, you can buy inverse ETFs. So the SH is the one-to-one short of the S&P. If the S&P was down, 2.25% today, the SH was up 2.25%. One-to-one, no leverage, but it is inverse. SSO is the 2-to-1 bull of the S&P. So if tomorrow the S&P is up 2%, SSO should be up 4% in a day. SDS is the one that I mentioned earlier that I've been long for about a week and a half. If the S&P drops 2.5%, then the SDS will be up 5%. Okay, twice as much as the S&P is down, SDS will be up. Then there's the triple inverse, the SPXU. That's the 3 times inverse. So again, if the S&P is down 2%, SPXU will be up 6% in a day. If the S&P has a 3% move down in one day, SPXU will be up 9%, 3 times the inverse. PSQ is a symbol for the one-to-one short. On the NASDAQ, again, if you have a cash account or an IRA, you can buy the PSQ, and if NASDAQ is down 2% in a day, that'll be up 2%. No leverage, just 1-to-1. QLD is the 2-to-1 bull of the triple Qs. I got to update my slide and get rid of that quad Q. It used to be quad Qs about 3 months ago, and they dropped the Q once we started going down. So the QLD is a 2-to-1 bull of the NASDAQ. So if the NASDAQ is up one day, 200%, QLD will be up twice as much, 5%. QID is the 2-to-1 inverse or bear of the NASDAQ. So today, if the NASDAQ was down 3%, QID will be up 6%, or 5.9 or 6.1, give or take a few tenths of a percent. 3-to-1 inverse of the Qs is the SQQQ. If the Qs are down 3% today, that will be up 9%. And as of April or May, the volume was very close. It's probably over 1 million shares right now. So again, type in SQQQ on your chart platform and see what kind of volume they're doing. They're probably over 1 million now, so check that out. UWM is the 2-time bull of the Russell. UWM will go up twice as much as the Russell on a bull day, and it'll go twice as down on a down day. TWM is the ProShares Russell 2 times bear. So the Russell was down. I think the Russell was down like 3.5% today. The TWM was up 7%. Okay, twice as much as the Russell goes down. TNA are the ones on steroids. TNA is the 3-to-1 bull of the Russell index, and TZA is a 3-to-1 bear. So again, today the Russell was down 3.45 or 3.5%. TNA was down 9.5 or 10%, and then the TZA was up 9.5 or 10%. Okay, those are big moves in a day. When the Russell was a 3% day, TNA and TZA have 9% days. Okay. There's the financials. FAS is a 3 times bull, and FAZ is a 3 times bear. Those are basically the 3-to-1s of the XLF. And the FAZ probably had a real good day today because XLF was down like 3% today, down in the low 12s or the upper 11s. Okay. All right, here's some international and emerging market ETFs. We've got about 10 minutes left. I want to make sure we cover all the information here. So here's the big international and emerging market ETFs. China, Australia, Brazil, Canada, Germany. They're all iShares, and MSCI stands for Morgan Stanley Capital International. So MSCI is a big indexer, just like Dow Jones, S&P, and NASDAQ. So they do a lot of the indexes for the international. EWJ is the Japan, EWS Singapore. They're all liquid. They all do 1 million shares unless it has full volume in parentheses. South Korea, Taiwan. And then there's the EM, emerging market, a huge one. It does a lot of volume, EM. I'll give you a few seconds to write down those symbols, but I've got to keep moving on. Again, don't forget, this will be archived, so if you miss some of the symbols, you want to write them down or listen to it again, it'll be archived tonight or tomorrow, I'm sure. Katrina will update us on that at the end. All right, there's even some dividend-paying ETFs. There's Wisdom Tree, the big dividend player of ETFs. Spiders has the SDY and then the DWX. Those are those are international dividend-paying ETFs. And then EDIV is emerging market dividend-paying ETFs. So if you own these ETFs, you're going to pay a quarterly dividend. Some of them, do it quarterly. Some of them do it annually, and some of them do it twice a year. Vanguard has a huge ETF offering. VIG and DYM are 2 big Vanguard dividend-paying ETFs. And Wisdom Tree, again, they're the ones that pioneered the dividend-paying ETFs. They have the DTD and then the DS. One's a small cap, and then they have the DON, there's the mid cap. I guess DTD and DES are both small caps. And then the DON, DON is the mid cap dividend ETF. iShares has a couple offerings as well, DVY and HDV. And then the IEV is International Dividend Paying ETF. PowerShares, a big ETF fund sponsor, has the PFM, Mega Cap, Blue Chip. PEY is a small and mid cap. PID is International. And KBYW is a real estate dividend paying ETF. And you got KBWD, is a financial dividend paying ETF. Okay, so write those down, do some due diligence, check into them. I will give you at the end a lot of the top 4 or 5 websites of these sponsors: Wisdom Tree, ProShares, Direxion, and iShares. So that's coming up shortly. Here's the largest ETFs out there by market cap. Actually, again, this is from April. I think in late July or early August, GLD overtook Spiders because people were selling stocks and buying gold. in August and late July. So there's more assets in GLD now than there are in SPDR. So you need to put GLD on top and SPDR second. EM is the third largest, and VWO is the emerging markets ETF from Vanguard. So 2 out of the 4 largest ETFs are emerging markets. Those are, underdeveloped, on the up and up emerging markets. EFA is the Europe, Asia, and Far East. iShares, Morgan Stanley Capital International, Europe, Asia, and Far East is $37.5 billion in assets. QQQ is also huge. PowerShares, NASDAQ 100. IVV is the iShares version of the SPY. It's an iShares S&P 500, very similar to SPDR's. TIP, we talked about, the Barclays TIP. Vanguard VTI is the total stock market. It takes into account 4 or 5 different countries and stock markets. And then the LQG is the iShares investment grade corporate bond ETF. Is a very large one, LQG. All right, here's the most actively traded ETFs. SPDR's, IWM Russell, QQQs, EM, GLD, EWE is Brazil, XLF, the financials, EFA, the Europe, Asia, and the Far East, FXI, China, and the only leveraged one to make the top 10 here is the SDS. And how much $1 billion turnover day to day. So those are the most actively traded ETFs. Okay. Write those down, do your due diligence, type them into your chart platform. All right, here's some good websites, gang. In addition to internationalsecurityexchange.com, ISE, obviously there's some good, I know they have some ETF trade signals and some other things you can set up on internationalsecurityexchange.com. Here's some other ones, iShares, ProShares, PowerShares, Direxion funds are the big 2-to-1 and 3-to-1 leveraged ETFs. ETFDB, the ETF database is a big one. ETF Digest is a good one that I use. And Sector Spider we talked about. ETF Screen is a pretty good one. And then Finance Yahoo has a very good ETF section. Bloomberg.com, awesome ETF section. MarketWatch.com, awesome ETF section. And Morningstar, based out of Chicago, where I'm, if you haven't detected my Midwest accent yet. Okay, so those are some good websites, gang. In addition to ISE has some great ETF signals and ETF information on there, so also definitely include that one. Okay, let's see here. I think that, okay, yeah, there's the research for ISE. Yeah, ISE.com/ETF has some great trade alerts, timely trading ideas with in-depth analysis. You can sign up there, ISE.com/ETF. And then there's another one with Flash Index. There's free ETF trade alerts, ISE.com/ETF trade alerts. Very good one as well. There's some podcasts. So ISE gives a lot of great resources to further your education knowledge on these exchange-traded funds. And then obviously the webinars. Okay, I think, wow, that might be 4:28. Must be on a good, let's see. Okay, yeah, we got 3 or 5 minutes for any particular questions on anything. I hope I didn't go too fast. I hope you took good notes. Again, it will be archived, so if you need to watch part of it, you can stop and start it as you need. And then if you didn't get a chance to write down those symbols because you couldn't find a pen or pencil fast enough, watch part of the archive. Okay? So, again, I'll be here for a few more minutes if there's any questions. I hope you enjoyed it. Thanks again for ISE for holding these platforms. I know a couple other of our Online Trading Academy instructors make frequent appearances here. Steve Mizik, for one, does a lot of great currency and ETF webinars. Sure, I'll come back with some more information on some ETF stuff as well. News Ask, TBT, which ones are the corresponding? Well, TBT and TLT are Treasury-based ETFs, and FAS and FAZ are financial, off the financials, banks, broker-dealers, and insurance companies. So they're a little bit different. So, and also the FAS and FAZ are 3-to-1. TBT is 2-to-1 on the bonds, and TLT is no leverage, is the same way as the bonds. Okay. Right. I mean, if finances are going down hard, then bonds are probably going up. So they might have an inverse relationship. Yeah. Yeah. If stocks keep getting hit to the downside, especially with financials, then TLT will keep going up. Again, it's a flight to quality, flight to safety asset class. Okay. So, all right. right. So again, it looks like wow. I was worried about not finishing on time, or worried I'd finish at 4:15 and we had 15 minutes to kill, but looks like my timing's pretty good here. So again, thanks for coming. Looks like there's about 75 or 80 of us in here for a while there, and hope you enjoyed it. And we'll see you next time. I'll hang out for a few minutes if you have any questions. But thanks so much again, and we'll see you next time.
Okay, great. Thanks again, Dan, for sharing your insights this afternoon. Thanks to all of you for joining us. To learn more about the sector ETFs that are based on ISE indexes, make sure to visit ISE.com/ETFs, like Dan mentioned. You'll be able to find some more product info, articles, and a link to sign up for those free trade alerts that can help you learn how to best trade these ETFs. This is a valuable free tool that we offer to all of our webinar attendees. We do have a lot of resources available there on the website if you're looking to trade products based on some of these industries and sectors, so make sure to check it out on ISE.com and take advantage. If you have any questions or comments, make sure to send us an email at webinars@ISE.com. And of course, there will be a recording of today's webinar. It's available at ISE.com/archive. You'll be able to check out this webinar within a few days, and we have all of our other webinars archived on there as well if you'd like to check those out. So thanks again to everyone, and hope to see you back next week. Take care.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.